Good afternoon, traders. It's Tuesday, October 21st. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer. Member of FINRA SIPC. Most trades placed by me are placed through T3 Trading Group. You should carefully consider whether or not trading is suitable for you based on your own financial condition. Position disclosure. I got out of OKLO. I got out of RGTI after I got back into it. I got into QS today. I think that one's new. So I'm just trying to continue to push these pre-revenue stocks lower as much as I possibly can, but also at a certain point not chase. But when it's appropriate, I'm trying to add. We got Netflix after hours. We got Texas Instrument after hours. They're both trading lower. Neither of them seem like disasters, but they definitely did not seem like good enough. Let me try to find here the TXN fourth quarter revenue estimates is like a little bit light on the range. I think that's hitting TXN down. SMH. Sometimes I feel like TXN is like the forgotten SMH stock. SMH is trading lower here after hours because TXN is trading lower after hours. It's interesting that even like a Nvidia is trading down after hours off of Texas. You wouldn't really expect that because their businesses are a little bit different, even though they're both SMH names. But let's keep watching that Nvidia 180. Netflix, same deal. Just not really good enough, I think, on their fourth quarter estimates. Um, their operating margin expectation came in a little bit light. Their revenue expectation is very in line, which I guess isn't quite good enough for fourth quarter. Uh, so yeah, I think that the market was just expecting a little bit more from this. They also missed pretty decently on EPS, a little bit on their operating income. So I just don't quite think it's enough here for either of those companies. So those are our two most important ones. Mattel is out. They're trading down. Looks like they bounced a little bit off their low. Is that low real? There's no way that low is real, right? My chart can't go that far. Mattel says sales dip as tariff uncertainty delays Christmas orders. Yeah, continuing to see that, I think, with like the regular economy stocks being impacted by tariffs, but software stocks and AI stocks and pre-revenue stock. If you're pre-revenue, you don't have to pay a tariff. So they've been obviously unaffected. As far as the market goes today, um, really slow day for the perspective of the spies and Qs. A little bit more action on the IWM. We had like a pretty flat day. I think we closed up 0.1% on the day, and now we're trading down a little bit after hours because of Netflix and TXN. I think the Qs closed very small positive as well, but now they're down 0.2% for the same reason. And the IWM, which was weaker, did close down, I think, about 0.5% or so, maybe a little bit less. Um, DraftKings with some headlines here. DraftKings moving up. Is DraftKings earnings? If it is, I didn't realize they had earnings. I'm just seeing a headline though. I'm not seeing an earnings report. It's DraftKings trading higher. Um, yeah. So I don't have a ton to talk about or to really update here in terms of at the index level, except I'd go as far as just to say a couple of things, I guess, in terms of an update on information, an update on some of the research that we look at. The technicals are now bullish. That's straightforward. I think that you have to lose yesterday's low in order to lose the bullishness of the technicals. If you lose yesterday's low, we can begin to reassess. But the spies are above and did nothing today. The Qs are above and did nothing today. The IWM a little bit weaker, traded below yesterday's low at a certain point, but closed back above it. So overall, these technicals, especially the spies and the Qs, I think are looking pretty darn bullish. But pay attention to yesterday's low. The balancing act in my head is on a couple of different factors if we're going to update on research. So, one is I don't have the note in front of me, but I can just kind of go off memory, and maybe some highlights of it will be in Pat's note tomorrow morning. But we had an update from our friend Charlie over at Nomura, and the note I think read overall pretty bullish, and what the note noted was that this kind of relatively rare anomaly that we saw with the VIX move last week, ripping higher, squeezing higher, but the market not really giving a pullback in the same way. Same deal. If you showed me the VIX doing what it did in a vacuum and you said, "Hey, Derek, guess what the market's doing?" I'd be like, "Oh, we're probably down somewhere 5 to 10% off of highs." But that never happened, right? We never triggered any of that systematic selling. We've talked about this over and over and over again, so I'll spare you guys me overly repeating myself. We never really triggered the more major systematic selling, and the main reason for that was just that retail, among a couple reasons. One of the main reasons is just that retail has continued to just have a monster bid into even the slightest dips. And there's a couple other reasons there as well. But the bottom line is that the market held in really well while the VIX squeezed higher. And now the VIX is coming all the way back down. And the bottom line is just looking back, the Nomura note looked back historically at previous incidences of basically getting a VIX squeeze without the market selling down in the same way. And the historical data set is 9 previous instances. So first thing I would note is that that's not a lot. The second thing that I would tell you though is in every instance, and again I'm just going off memory here, in every instance the market was higher a week later, a month later, a quarter later, and a year later. Not 9 out of 9. So you combine that historical reference with some bullish technicals, and if you're a bear, you should probably be a little bit nervous. Uh, the feather in the bear's hat right now, if there is a feather, I think comes from a couple of things. One is that we actually have a small amount of bearish seasonality here for like the next 1 week or so. Yesterday tends to historically actually be a really strong day. It's historically either the strongest or I think maybe second strongest actual calendar day of the entire year. And yesterday did not disappoint. It was a pretty strong upside day, even above, I think, the historical average. But after yesterday, you do tend to get a little bit of a week or so of potential historical weakness. So it's only a week. And again, just because something tends to happen in history does not mean that it has to happen, this time around. And we actually have a lot of incidences here in 2025 of periods of historical weakness not playing out this calendar year. But we'll see. But that's one feather that you can have in the cap of a bear. Two, I would say, is the actually fairly consistent bearish option flow that we've still been seeing come into the market, which we started to see of in October, I think before October 10th sell-off. And we, I think, saw some renewed action there today. A lot of it's pretty short dated, 0 DTE, 1 DTE stuff, some weeklies. But we are still seeing bearish option flow come in. And then the third thing that if you're trying to be a bear that you can still kind of look towards is the fact that we never got any of the CTA systematic positioning unwinding. But that's still something that needs to trigger. And the counterpoint to that is we did get some degree of the vol control selling to I would say that there's still asymmetric risk to the downside in terms of volatility here and what those funds can do, but it's less than it was prior to October 10th because you did sell down a little bit from some of those vol control funds last week. And again, it was entirely absorbed by retail. But we're now seeming to be back in a situation where if you get an unchanged day like you did today, you're getting a couple $1 billion worth of buying that's coming back into the market actually from those. But if you were to sell down a percentage point, you could still get 5 billion of selling. And so there's still some asymmetric risk to the downside, I think, from vol control, but it's less than it was prior to October 10th. Prior to October 10th, when the market was making highs, it was zero buying at that point, and even a flat market pretty much, and more like 7, 8, 9 billion, if I remember correctly, into a 1% down move. So still some asymmetric risk there, but less than it was, and much more so, I think, with the CTA trend following community, if that could ever trigger. But as the market moves higher, that becomes further away. So I don't know. We'll just see here if earnings reports or what have you can get this market back below yesterday's low. But you know, the historical context here now becomes very bullish, and the technicals to me here are very bullish as well. So unless you lose yesterday's low, there's no real reason to, I think, be harping on the bear side of this market, but it doesn't mean you can't keep in the back of your head that the technical picture could change if you lose that level, and there is some seasonal weakness here over the course of the next week. So it's kind of the bottom line with that as we enter into earnings season. With that said, I still think that there's been a lot of money to be made and may continue to be on the short side in a lot of the non-profitable tech. At the same time as I'm not afraid to push downside, which is something that I have historically struggled with as a trader. Is adding down and adding up in down moves and up moves. So I'm trying not to be bashful in that regard, but I also want to make sure I'm not like all out chasing. So at a certain point into this down move for some of these names, I'm kind of getting out of them, and I would like to see more of a real bounce back in order to kind of reinitiate some shorts. So I got back into RGTI today, and when I got back into it, I did it with an even bigger price target, but I managed to get all the way to that price target today, so I'm back out of it. At this point, I still think that this RGTI has a date with 30, but you got to respect that the stock just came from $58 down to $39 in a very short period of time and might be due for a little bit of a bounce or a little bit of sideways action, even if it is going to continue lower. So I don't think that you chase 39.50 at this point. I think that if you can get that bounce back into the low to mid 40s, or you can get some sideways price action for a couple of days, maybe that becomes more of a signal to say, all right, I think I can push for some further downside here. And QBTS is pretty much the same deal. OKLO is another one that I was short, but I'm out of that now. I felt like I could have and should have been more aggressive, though there are no could haves and should haves in trading. Um, but a little bit more of an expensive stock. But I think that this thing also has a date with 130, if not 110. So I'm going to continue to keep an eye on that. I have been trying to hammer a little bit on some of these other ones that have broken but haven't fully gone yet, like a QS or a JOBY or Quad U, which treated me pretty well today, or this Uami, was short in Uami above 14 and after hours yesterday, and was covering some below 12 today, so that was pretty solid as well. So trying to push it when it seems reasonable to do so, but also have to balance not being a full out chaser at a certain point, because if these things give a bear, even assuming that I'm even right, if they give a bear market bounce or a dead cat rally or whatever you want to call it, when you're talking about these types of stocks, those can be very, very vicious moves. So you got to make sure that your sizing and your risk is in check on that type of stuff. And that's pretty much all I got. Everything else I think was relatively boring today. Still really watching the AI trade. Couple things I would note on that. Oracle gave a little bit of an oversold bounce in the beginning of the day. Rock had a great call on that, pretty much at lows early on. That was solid, but it also rolled back down a little bit. So the Goldman Sachs note that we read this morning really said that you should be watching this Oracle as a read through in some ways on the entire AI trade. And I agree with that. And this Oracle's not been trading well. One of the things that we noted, I forget if it was yesterday or the day before yesterday, is isn't it impressive that the entire market's continuing to hold up with the AI trade when Oracle's starting to trade as bad as it is? So let's continue to watch that. AVGO had some chatter with Anthropic today and closed nicely negative. Now, it wasn't necessarily new news, I don't think. It was just that, Anthropic might be working with AVGO and it might be giving them $10 billion worth of revenue. I don't think that that was necessarily new, but in our more traditional AI insanity market, it probably would have gone up on that anyway. And not only did it not go up, it actually traded lower. NVIDIA really continues to be one to watch for that 180 level. There's been so many tests of this NVIDIA 180 level, I've lost count. Um, on the 14th, on the 15th, on the 16th, on the 17th. Today, there was additional pre-market tests of 180. I can't remember a support level being tested so many times and not breaking. Um, so I don't know. Maybe it's not going to break, or maybe they're just wearing away at that demand that's there, and eventually it breaks through it. So we really got to continue to watch that NVIDIA 180. I mean, AMD still looks fantastic. Building a beautiful bull wedge. I would argue that there's too much extension off the 21 here on AMD. So I don't love the 240 breakout. It's just a little too extended off that 21. But overall, you can't deny that. Whereas some of these other ones look a little more precarious, or what Oracle's been doing, AVGO today, NVIDIA, AMD overall still looks pretty darn phenomenal. So that's something we got to keep a very, very close eye on. I'm still of the thought process that if you lose the AI trade, you lose the entire economy, honestly. Because everything I keep seeing and viewing on the regular economy, and I say that with air quotes, is pretty darn negative right now. But there's that wealth effect from the stock market, and there is hundreds of billions of dollars, expected to be trillions of dollars of spending coming from this AI trade. But seeing that Nvidia is like guaranteeing some of OpenAI's loans and stuff like that as a headline this morning, I thought was interesting and honestly potentially dangerous for the entire sector. So TBD on how that one plays out. But it's gonna be all I got. I'm happy to take a look at whatever you guys are looking at. DraftKings acquires Railbird to advance future growth and predictions market. Interesting. A lot of times the acquirer company ends up going down. We'll see. Obviously, there's more going on here than just that. I was waiting for some kind of pullback in GM, but there was nothing from John. Yeah, we'll see. I saw some statistics on one of the podcasts that I listened to that confirmed through statistics something that we speak about a lot, which is how a stock is doing into an earnings report really indicates how it performs after that earnings report. And the statistics, well, while I can't quote them, say exactly what we as a team have been talking about for years now, which is that when you have a really big rally into an earnings report, that good earnings report may not be good enough. But if the stock was really weak into that earnings report, that good earnings report can give you a really big boost higher. So I think when you're looking at some of the earnings names that came out this morning, there was a few that were in there that were names that were a little bit beaten up. Not that GM was super beaten up, but it had that pullback right before the report. If you look at like a Triple M, how did this end up closing? Yeah, Triple M, just not that it was beaten up, but a little bit of pullback in that report, and then it was continuing higher from there. I think there was a couple others as well. So we'll see. Yeah, no pullback at all from GM today. Very strong. ISRG going. Yeah, wow. ISRG really strong. I don't really ever trade that one. Thoughts on Google going forward based on today's news and technicals? Sure. So we saw Google come out with some news today about OpenAI creating a search engine basically that would compete with Google. So Google had a really big downtick on that. Here's the thing about Google is that it's a balance. Google had been and probably still is, even after this recent rally, the cheapest by far of from like a PE perspective or a forward PE perspective of any of the Mag 7 stocks. Like by far. Like this thing, I don't remember, it was trading at like a 13, 14, 15 forward PE, like insanely, insanely cheap. And a lot of times stocks are cheap for somewhat of a reason. And then the question that you want to ask yourself if you're like a value investor, which most of us are not, but I do incorporate some degree of understanding fundamentals into my trading, is when you're looking at something that's trading cheap, is it a value trap or is it trading at a bargain and a deal and something that you should be buying? Most of the time, again, if something's trading cheap, it's trading cheap for a reason. And the reason why Google had gotten down to such a puny forward PE compared to the rest of Mag 7 is basically the thought process that AI and is going to eat their lunch and that there's just going to be a lot of competition going forward when it comes to search. And that's exactly correct. Though my thought process had been that there is enough other businesses going on here with Google where this is not a value trap. You know, you look at like the YouTube business is just one example. You also have obviously the cloud business, which continues to grow at a pretty tremendous rate. I thought that that made this thing like a real bargain. And for most of 2025, especially on the way up here from April, I'm pretty sure you guys have been hearing me say on repeat that Google is my favorite thing to buy. And then you got an incredible move out of it. You know, it's worked its way from $150 to $250. And then today you get, you know, another headline that's just kind of a negative on their business. So, you know, the stock is not as cheap as it was. I still don't think it's expensive, but that news hurts. You know, that's the core of their business is search and ad revenue. So it hurts. At the end of the day here, overall, I would say I still like Google. I don't think that the chart's broken, and it was able to bounce back enough during the day. It negated a lot of that news, but I think it still looks. I think it still looks fine. Um, to the point where you could even be low versus long versus today's low. If it were to really start to lose 240, I think that you have more of a technical problem. But while it's above today's low, while it's above 240, it's still a stock that I would rather be long than short. So I hope that helps. Good stuff, Varun. Cool. Nothing else going on in the VTF for the moment. Pop over to the YouTube for Mr. Trees. Cool. Letting me know I sound good. I appreciate that there, Mr. Trees. Anybody else have anything? I don't mind doing a short one. I'm planning on going for a run at some point this afternoon. I'd like to do that. Got to finish up a few things, but I'm also not in a particular rush if people do have questions, but it was a slow day. So going once, going twice, sold. All right, that's the end of today's afternoon meeting. Let's see if Netflix and TXN give us a gap down tomorrow. Remember back in the day when we used to get one of those once in a while? I don't either. Have a good night.